Hello traders, the title of the video is Candlestick Trader explains the bullish hammer candlestick pattern. Alright, so you may say to me, George, I already know about alright, the hammer candlestick pattern. What do you have new to tell me today? Alright, so I will say to you, alright, grab a seat, relax, alright, and give us, okay, your 10 minutes, all right? And then I will explain to you few things that you may already know about the hammer candlestick pattern, all right? So the hammer candlestick pattern is when the price did open somewhere like this, and then the price goes up. So why usually the price open here, all right? And then for one reason or another, people will sell it first. So the price going down, going down, going down, okay, which means the candlestick pattern in the first stage is bearish, so it opens and then it starts going down, all right, going down, going down. But as the price continues to go down, there were more buyers that were buying the stock as the price was going down. But suddenly the price started going back up and managed, okay, to close above the opening level. So it became a bullish. So it's a powerful candlestick pattern, full of bullish sentiment. So first reaction, the bearish trader were dominant force, but at the end of the day, or at the end of the week, or at the end of the month, talking about different time frame, at the end of the year, all right, the bullish market participant managed to overwhelm, so to speak, those bearish, nasty traders. Now, remember that the bearish traders are not nasty at all. I'm just using that word for fun, okay? All right, so this is what you need to understand about the hammer candlestick, the bullish hammer candlestick bar, all right? Okay. Now, another time, there is another scenario, all right? You will see it when a price will open somewhere here like this, all right? And then we start going down. So the first reaction as it was here, start going down from here. Look where I was. Start going down, going down, going down. People are selling like mad dog. They just want to sell that day or that month or that week. All right. So if you see on a quarterly chart, it means that they are selling for 3 months. All right. But before that quarterly candlestick bar or that hammer is closed, there were suddenly some buyers. And this time, the buyers start buying again, all right? They're pushing back the price. Price went down all the way here. Then they start pushing it back. Boom, 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 boom. But this time, the price did not close above the opening price. Remember now, our opening price is here. But it closed below the opening price. Though in theory, we may say that this candlestick bar is bearish because the closing price is below the opening price. Looking at the whole story, what has happened there, who is the winner? Let me ask you, who is the winner? Is it the bullish traders or the bearish traders? Who have won the day? Who has won the month, the quarterly? Is the bullish trader. Because why? You can see that if we measure, so if you use a percentage, you may say that this is the size of this candlestick bar, and this portion here is the bullish portion, and the one that is left is the smaller one here, which is bearish. So who have won? We can say the bullish trader has won. So that's how you want to analyze a bullish candlestick bar and a bearish candlestick bar. So a bearish candlestick bar, it doesn't mean that it's not because, all right, the price has closed below the opening price. In theory, it's true that it's bearish if it closes below the opening price. But when we check in a story, you ask the correct question, who has won the day or the month, you want to see the portion that was reserved for the bullish trader and the portion that was reserved for the bearish traders. And looking at the hammer, the bullish hammer, you will notice that the bullish traders, okay, have won the day or have won the month, have won the quarterly candlestick bar. This is, okay, the hammer. Now you may say, George, I already know that. I have more to tell you, all right? The bullish hammer, so I talked to traders before, so those who are following us should just know that I'm talking to new traders now. the bullish hammer very often will take place at a key levels, key support level. So I don't want to say just support level. I just want to say to you that you will see it at the key levels. So the best place to see, so price is going down fast. So going down, you see here, it's going down, going down, going down. Here it is going down. You see, we start seeing hammer. This is a hammer, yes or no, you see. It opened here, went down all the way here, but close up. But if you measure the session that is reserved for the bull and the bear, you'll see that the bull have won. But they didn't win very much for this candlestick bar because it's no big difference between the bearish session and the bullish session. But this one here, look at this one here. Again, it did close below the opening price, but with a long tail here, we know that the session for the bull is higher than the session for the bear. This is a hammer here. Very often you will see it, okay, at a key level. So you may say to me, where are the key levels here? Sometimes those key levels are hidden. How do we find them? Good. We use Fibonacci extensions. All right? We use Fibonacci extension if we can't see it on the chart. All right. So those are the places where we can see the bullish hammer. All right, at the key level. So if you see any hammer anywhere floating around, put a question mark on this, all right, and trade it carefully. But the best place is this. But if I refer you, if I'm talking about the hammer candlestick pattern, that's a different thing. So far I've been talking about the hammer candlestick bar. Now I want to talk to you about the hammer candlestick pattern. What is the bullish hammer candlestick pattern? The bullish hammer candlestick pattern is formed of the hammer itself and a bullish candlestick bar. You see here? So we have this hammer here. Now we have a plain clove, so to speak, a plain clove, all right? Bullish candlestick bar. You see this one is a bullish candlestick bar. Opens here, close up nicely near the high. It's a bullish candlestick bar. So the hammer plus a bullish candlestick bar, now we have a bullish hammer candlestick pattern. So the hammer bullish candlestick pattern will take place also at the key levels. So once the hammer is closed and the bullish candlestick bar is closed, the next step, I talked about this before, we highlight the high, the low, and the median line of the bullish candlestick bar. And you will see very often the price will try to retest the median line of that bullish candlestick bar. You see, this is the bullish candlestick bar. Am I talking to myself? Okay, you see here? This is the bullish. Pay attention. That's the bullish candlestick bar, okay? So we highlight the high, the low, and the median line. After that candlestick bar is closed, you see when the third candlestick bar is closed, so this is the first, the second. When the third candlestick bar is closed, is opening, you see, they will try to retest the median line of this one. This is what has happened here. See the tail, try to retest it. Trader will apply top-down trading method. Here it is, and it just push. All right, here it is. So we have here a bullish hammer candlestick pattern that is formed, okay, right here. So you may say, well, so now you can see the price went down here. So I don't know whether we are missing data here. Let's try to play a little bit with Fibonacci here. I'm not sure what we will get. So apply Fibonacci extension to this price action, this one here. All right, our 138.2 is up here. You can see that the hammer is formed in the zone of 314%. Fibonacci extension zone, the 314% Fibonacci extension zone. All right, so this is a hidden key level, key support level. All right, so the trick that you can use is that if the price goes down, see here, normally we will prefer like this. In normal condition, we prefer goes down and then form a low. And now it starts going down. The minimum price move is free. If we see a bullish hammer, okay, candlestick pattern here, that's a good one, because the reason why we need to be somewhere in this zone, I am at that time pressure, so I'm watching the time carefully, because All right, you will apply, okay, Fibonacci extension to this section here, from here down to this level here, and you want to make sure that your bullish hammer candlestick pattern is being formed at a specific key levels. All right, that's what you want to do. So try to apply Fibonacci extension and ask the question, where is this, okay, bullish hammer candlestick bar being formed? Is it being formed at a key level or not? And where is that key level? And once we see the bullish hammer candlestick pattern, it's just a trading setup. It's not finished. It's not a signal to buy. It's not rush and buy. We just wait now. Now we use a different time frame trading method to trade it. This will allow us to control the risk and to avoid surprises. Because if you just look at the pattern, you see, yes, it is a bullish candlestick pattern, and you just buy, you say it will go up. Price can go down instead. So by using different time frame trading method, we are now controlling the trend, and we want to time it when we're supposed to buy instead of buying only to see it coming down. All right? But the tail of the hammer is the session for the bull, and the body of the hammer, all right, can be also the session for the bear. But for this one that I show you here, you can see that the closing price is above the opening price. So this is a very, very bullish when the closing price is above the opening price of the hammer. This is a very, very bullish candlestick bar because the price went down first all the way here, but managed to close bullishly above the opening price. This is a huge story. So, but if you see on a daily chart, it's still very, very bullish, all right? If you see on a quarterly chart, that's a very, 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 very bullish because it took 3 months for that candlestick bar to be formed. There's, hold on please, I'll show you one here. So that bullish hammer candlestick bar on the quarterly chart is very, very powerful. You see, this one here, you see here? This is a hammer here, all right? So price did open here, it opened here, right? And then went down, people push it down because they were selling first. See, they were selling, and I see did open here, they sell it again. So went down all the way here, but they were met by bullish buyers that push it back up. But not only they kick them out completely. So this candlestick bar has no pattern, no bearish sign at all. They kick all the bearish traders out of this session. Look at the following candlestick bar. It's bullish. All right. So those two candlestick bars have formed a bullish hammer candlestick pattern here. But the question, was he at the right place? But you see, price went down here. It's all doji, all doji. Finally, the price went down, which means probably this is a resistance zone. I don't know whether we are missing data here or not. So, you see, it's a very, very bullish candlestick bar, the bullish hammer, very, very powerful. Right? Whether it's closing below the opening price, pay attention to the tail and watch the reaction. All right? Very, very powerful candlestick bar. So, the bullish hammer candlestick bar is a candlestick bar that is originally bearish, but at the closing price became very, very, very bullish. It's a reversal candlestick bar. All right? So people were selling first, price did open. People were selling first. There's one here again. This one we may say doji because the closing price is almost near the opening price. This is an inverted hammer here. I will talk about it in another video. But today I'm talking about the normal hammer, like this. All right? The bearish pressure was in place. But at the end of the day, at the end of the month, at the end of the quarter, that bearish pressure, okay, has completely evaporated. Which means it's a very, very bullish, okay, candlestick pattern. There's one here on the yearly chart, but here you see it's at the wrong place. See, price did open here, all right, went down here. By the end of the year, all right, it closed bullishly, all right, but it is at the wrong place. That's why I say to you, when we are talking about the pattern, all right, You need to know where and when the pattern is being formed. For the bullish hammer, we need it to be at the support level, at the key level. All right. Best scenario, we want the price to be going down fast. That's the best scenario. We want it to go down, price going down fast. And then at the end of the down move, we see that hammer, which means the bearish traders were dominating the market. And then suddenly we see the hammer telling us that they are losing the fight. Okay? Now we wait for the next candlestick bar. If it's bullish, now we implement a top-down trading method. But we want to see a down move first, and then boom, up. All right. This is the end of the tutorial about a candlestick trader. Explain a bullish hammer candlestick pattern. It's a candlestick bar that is originally bearish, but at the end of the day, month or quarterly chart, or year, okay, that candlestick bar, okay, turns to become a very, very bullish. All right. The bullish hammer is usually formed at the key level, mainly at the support level. We will prefer the price to be going down fast before we see, okay, the bullish, okay, hammer candlestick pattern. The bullish hammer candlestick pattern is formed of the hammer plus another bullish candlestick bar. Those two candlestick bars must close, and then trader must implement a top-down trading method to trade it. If you have any question or suggestion, all right, feel free to put in the comment section. In due course, I will be recording another video to answer your specific question. We are the STW24 traders talking about candlestick trader. Explain the bullish hammer candlestick pattern. Happy trading to you all, and speak to you soon. If you think this video is another blah 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 from George, all right, we want to know. Okay, give us the thumbs down so I know that, all right, George, you need to improve. But if you think that this video is very good, all right, give us the thumbs up. But if you think that this video is amazing, it's very important, it's essential for other traders, all right, feel free to share it on Google+, on Twitter, and also on Facebook. Happy trading to you all, and speak to you soon.